Appreciate it. Thank you, Jenny Horn. Insights on the shaping markets here. The markets have been under some serious pressure, not breaking through the lows earlier in the week. Bill Baruch, president of Blue Line Futures, is here. I do want to talk, of course, about the inflation prints and everything, but first up, your thoughts on what's going on here.
Yeah, I mean, it's been de-risking. Obviously, a broadening trade. There's been some move to value in recent weeks, and tech has gotten slammed. It's really at the end of the day, it's uncertainty, and uncertainty drives markets. And I think everybody's kind of waiting on more news coming from the administration on what the plans are, the tit for tat. But in the core too, there's also been a lot of deleveraging within hedge funds that had a bad February. I think that's also driving some of the move lower. So it's been an interesting environment, but I feel like we're in the later innings of the sell-off, and I think really we need a mean reversion, even if that's simply just getting back up to the 200-day moving average that we saw middle of last week.
All right, so it's interesting because we are seeing some price target cuts for the end of the year. However, they're still above 6,000. I mean, for example, Goldman Sachs came down to 6,200 and 6,500. Are you feeling like long-term the dips could be opportunities?
Yeah, I really do. I mean, I think that we're going to see, and I think it's becoming a crowded idea that we're going to see a strong back half of the year. But listen, this administration, they came in with a very telegraphed plan. As soon as they won the election, they went to work essentially in December, and we're really moving forward with things before the inauguration. A lot of those details came out in February. There was weak seasonals below the market, and some of those weak seasonals, they start to turn a bit here this week into next week. We have the Fed. I overall think, we rebound and it might be choppy through the summer, but I expect to see a lot of what's being done. They're a move on fiscal policy. If you asked me about 9 months ago or so, I said whoever won the election would need to crack down on fiscal policy. But the way they're going about it obviously has been unique, for better or worse. And I think that at the end of the day, between the fiscal policy, maybe a light at the end of the tunnel with tariffs, maybe they become a little more watered down, which may be also a crowded view. I think a lot of this kind of works through the system, but at the end of the day, it's less uncertainties, and less uncertainties paint a path of least resistance higher after a move like this. We're holding this view weekly, though. I mean, you don't want to hold a strong view here and with such uncertainty out there. But I do believe we're at the later innings of this in the near term, and there's a light at the end of the tunnel and through the second half of the year.
Do you think the Fed can make some mistakes? There are some folks who are pushing for a cut right now. There are others who say, wait and see. What do you think the Fed should do or shouldn't do?
Well, you're seeing two cuts being priced in, June and September. A lot of the banks are getting on with that too. I think if they jumped and made a cut right now, although the markets may respond favorably initially, then they would have questioned what does the Fed see and what are they worried about. I do think, though, as we work through things, the inflation data this week, the CPI, the PPI, definitely cooler than expected. But some of the factors there, they're not really going to work through to see that really cooling in PCE. So the Fed meeting is next week. I mean, obviously, we do not expect a cut yet. And I think the comments, the statements, the economic projections will certainly have an impact. And the other thing I'm watching really closely, Atlanta Fed GDP, it's very whimsical and it's very volatile. That from the data points that have factored into it very recently, also given some of the non-monetary gold imports, they put out an update last Friday. So everybody's really worried about growth. Everybody's really worried. You're seeing that inflect as well in sentiment data. So I think a lot of this is caught up to it really, really quickly. I think that expectation of very poor GDP is going to continue to get revised. And I think we could see some growth this quarter as well. As that works through the system, I think that's a positive for the market, but it also doesn't force the Fed's hand too quickly. And you don't want the Fed's hand to be forced too quickly either.
You mentioned gold, and I know you're running a commodities fund, and I wanted to ask you, as gold is hitting new highs today, new record highs, getting closer to 3,000. I don't think there's anybody on Wall Street who won't say that it's likely to hit 3,000. I mean, it's there. Where do you think gold could be headed, and what kind of commodities are you following that really could be winners in the next 12 months?
Yeah, I forgot to put on my gold 3000 hat, but hopefully we see that later today or before the weekend. In fact, I would be a little disappointed if we didn't. I'd be more concerned if we didn't see that breakthrough. I like gold, but I really want to see silver and copper lead this metals rally and through the summer. I mean, I think if you look at the futures contracts, the March contract in silver and those options, they rolled off at the end of February. Typically, that could open the door for some favorable seasonality where silver and then as well as copper leading. You're seeing copper trade 490 right now. China went through their Lunar New Year in February. The data in China, the inflation data over the last weekend, some of the import data from Russia, very, very poor. But that really shows and alludes to that Lunar New Year. I expect stronger data out of China in March. I expect to see continued jawboning, what we've already seen some today, continue to be a supportive for commodities, for the metals. You're also hearing here the administration, Howard Lutnick is talking about copper, bringing copper home. He talked about copper again yesterday. We're trying to get a minerals deal with Ukraine. I think we're in a commodity super cycle, and I think the metals are right in the middle of it for use cases too. Look at aluminum and copper and data centers. The list goes on and on. Silver's also in data centers. So I'm really excited about the metals. I want to see some leadership with silver, copper, as well as platinum. And then going into crude oil, I think could be bottoming out for a little bit of a near-term rally. I'm also excited about that, given some of what I talked about just now in China. The IEA came out earlier today, dampened demand a little bit. They can be a little more on the pessimistic side, but I think crude oil has a move maybe up to 71 in the near term. But there's a little more question marks about crude oil than I feel on the metals.
What's interesting is, okay, so I thank you for the target on oil because you said, look, near term it could go to 71. Today it's at 66.98. For the metals, you talked about copper, silver, platinum, maybe leading the metals rally. You still like gold, 3,000's right here, but you didn't really give any targets, and that's fine. But if you do have some potential ideas, do you think it's 5%? Do you think it's 10% gains? I mean, when you talk about leading a rally, what kind of numbers are you looking for, Bill?
Well, the big round number is $40 in silver. I mean, I think that's where we have to go. I think we need to clear $5 in copper. I really, over the next month and a half, I'd like to see the silver try to make a move to $40 and copper make a move to $5.25. If you look at the silver gold ratio, it's been hanging around 90, which is very high. I think what we have to see is maybe a move where gold extends well above 3,000, maybe 30.50 or so. But really, silver makes that move to $40. And I think that's what we have to see. Now, these are very volatile commodities, very big swings day to day, week to week. So you have to really kind of understand and be ready if you're going to be trading something like this, the type of volatility that they entail.
Yeah, and you were talking about copper 490, so you're looking for 525. That is big upside. Bill, great to see you. Bill Baruch, Blue Line Futures, thank you so much. Glad you were here today. Appreciate it.